The escalation of the conflict between Iran and Israel definitely increases the risks, both for supply chain stability, but also market volatility, as investors struggle to price in these risks. Over the weekend, the escalation moved to encompass domestic energy facilities in both Iran and Israel, including Iran's domestic gas supply, showing, in my view, that Israel wants to undermine Iran's domestic stability. The gas facility near South Pars mostly serves Iranian domestic needs, but it calls into question whether oil and gas facilities will be part of further escalations. So far, Iran's export facilities have not been hit. They continue to load oil onto shadow fleet vessels that are bound for China, but this could be slower going forward, reducing the exports of oil to China. The bigger concern is whether, in the case of escalation and further targets, we might see more frictions and disruptions, not only of Iranian supply, but also exports of oil and gas from the Gulf Cooperation Council countries. Those collectively, and particularly this question of the security of supply through the Strait of Hormuz. This is, the nightmare scenario for energy markets and for the GCC. It's far from certain that we are headed there now. But if we were to see Iran attempting to close the strait or starting to harass vessels belonging to GCC countries, we could see further increase in the geopolitical risk premium for oil markets. In the case of an attempted blockage of the strait itself, we would likely see even greater US involvement in this conflict. We would likely see concerns from China. I don't expect to see Chinese military being involved, but China, as the big buyer of fuel from across the Middle East, is obviously in play and the like. China is entering this moment having restocked its oil supplies, so it's perhaps in a relatively better place for a short disruption. But that's most relevant if it's only Iranian supplies disrupted. So range of risks, particularly as escalated. That being said, both Israel and Iran are wary of regionalizing this conflict, and Israel in particular seems more focused on trying to undermine Iranian domestic stability via its domestic energy supplies rather than oil exports. But things are moving quickly, and there's no clear end game or de-escalation path in sight yet. Now, what does this all mean for the GCC countries? Usually, a higher oil price is beneficial for these countries due to its support of liquidity that helps financial markets. However, in this case, there's an additional regional risk premia involved, and the fact that this is coming from a potential supply shock rather than strong demand limits the benefits. We're still seeing an environment, as I see it, that global demand for petroleum is sluggish. That countries like China are less oil dependent going forward, so the rates of growth will be lower. And of course, there could be some more caution about investment, sort of investment prospects more generally. Globally, this is happening at a time where tariffs are creating uncertainty of supply chains and of costs, and that's impacting as well oil markets. So, at the moment, in the current scenario, the energy and other economic dynamics are continuing on, but we could see higher shipping fees and insurance costs and other factors. So not a good not a good outcome for anyone in the world.